Hi, I'm Ali Patterson, and welcome to Season 5 of the Paytech Show. Today, we're going to be looking at what a post-PSD2 and strong customer authentication environment looks like for financial institutions and their customers. Were some of the fears in 2018 realised, or have payment regulations been evolving naturally to fit alongside the wealth of innovation in the industry? Customers now expect a certain level of service when paying, yet we don't want to think about the process, do we? How can financial institutions create and provide for their customers in this increasingly thankless task? To find out, we'll be looking into the payment channels and how they're changing to find the balance between strong customer authentication and the customer experience. Joining us on the show is FF News regular Jukka from Yliuntinen, who showcases their incredible step to bridging a secure and seamless payments experience with their Convigo tap solution. Gavin of Lloyds Bank fame showcases how his team have been looking to increasingly use collaboration in the payments industry to provide the best-in-class service for their customers. Looking at the knock-on impact SCA might have over in Asia Pacific, we called up Greg, the CEO of Tonik Bank. With Europe often leading the way when it comes to rules and regulations, it's interesting to hear how other nations might interpret the policies and apply them in their own way. So Jukka, let's talk a little bit about PSD2, which obviously came into full effect back in 2018. Strong customer authentication was on the books back then. Do you think that was some of the biggest fears for banks at the time?
I believe that the biggest fear they had was the question that, especially really for an issuing bank, which this impacted very much, was that can they comply with such requirements? And especially as user authentication, it has a really profound impact on many of the processes, of course, what the bank has, as well as the systems that they do have. To give an example, so when we log into the web bank or we log into the mobile banking, there is an authentication. Okay, not that would be now impacted by the PSD2, but if you have a process, if you have a system, if you have technologies, you need to then look, can you apply those also for the items which were impacted by the PSD2, which is, by the way, in a simple terms, e-commerce transactions and then the contactless transactions. So, and then of course you need to also look at what does it mean for you as a bank when you do payment in, or your consumer customers do payment in different environments. So whether you do online payments, do you mobile payments, you make payments on the point of sales, if you do the point of sales payment with your card, your wearable, your phones and so forth. So there is a huge amount of items that you need to think about, because then the outcome should be that there is some sort of a unified way of doing this from the bank's point of view, but especially from the consumer point of view.
These regulatory supporting mechanisms are also happening here in the region, and in particular in the Philippines. We've had the first open banking pilot kick off earlier this year. So the central bank is very keen to create an open banking, healthy open banking ecosystem. So we're actually a participant of that pilot, and we're preparing to start integration of specifically the statements sharing APIs, because we think as a first step that could help us a lot on the credit process. Since the majority of even bank customers don't have prior credit history or credit bureau record, this is a very useful way to help us in assessing their credit worthiness. So that's definitely happening, and we're very excited about it, but very early days still. On the customer safety and security and authentication, there's a huge issue anywhere in the emerging markets with customer trust to the digital channel. So of course, that's something we've been putting a lot of thought into, how to make sure that the customer's money stays safe in the cloud. And we've been working with a variety of vendors both on the app security and cyber protection. We're also enabling some features in our app that are among the first in the market, such as card blocking from the app, from inside the app. Believe it or not, the large banks, the incumbents, don't really have even a feature like that. Those are all things that we're very conscious of the security that the customer wants to have in connection with his account. And we rolled out our physical debit card just last month, and that card has a lot of these features that we're working on in cooperation with MasterCard. The regulators in the region are very proactive. They see the opportunity in making a real difference in their customers' lives, in their consumers' lives. There has been a lot of movement, in all the major countries in the region towards digital banking, towards creating that safer infrastructure. A lot of experimentation, specifically BSP. I think the central bank, Banco Central in the Philippines, they've been at the forefront of that, even compared to all the other regulators. They're doing a lot of proactive work, and even our bank, we're put for regulation to a different department than the normal banks. The digital banks are being regulated by the IT department of the central bank, which is operating with a mandate to experiment and to learn and to find ways of supporting that growth of consumer economy and financial inclusion. We see big movement with that. We're very happy to be working with the Filipino regulator on a lot of these aspects. I think this will be over the next 5 to 10 years. This will create a complete revolution in financial inclusion and financial access in the region.
When PSD2 came into full effect in Europe back in 2018 and strong customer authentication was on the books, how did you think it was going to change payments in a pre-COVID ecosystem?
Yeah, well, I think the demand for online and remote commerce and e-commerce has really come to the fore during the pandemic and during the crisis. On the proposition side, as I mentioned, things like pre-ordering, click and collect, home delivery, QR codes, request to pay have become much more prominent. On the business management side of merchants, things like quicker settlement to benefit cash flow and working capital, or currency conversion to support purchases in other currencies have really come to the fore. And to address almost all of those needs, the answer in our case has been collaboration and partnership. So whether that's working with e-commerce experts or shopping carts, whatever it might be, that need is only growing. And actually at Lloyds, if you were looking for a sign, we're actually growing the team of specialists that we have that find and manage partnerships that we need to deliver the services for our customers. So, for the rest of this year and into 2022, I'd expect a further acceleration of that innovation through partnerships, through collaboration, and particularly in the area of e-commerce and remote commerce.
Has the increased demand for e-commerce seen an increase in merchants' demands in the payment space? And does this itself underline that need to collaborate?
Yes, I think so. I mean, the need to innovate at pace, the need to deliver resilient solutions to our customers, those became even more critical to do during the pandemic and during the lockdowns that we experienced in the UK. That meant a lot of merchants, a lot of businesses either had to transact online for the first time, or they had to significantly beef up their e-commerce and their remote commerce and their online offerings. And that meant that they were turning to payment service providers and to banks to be able to provide the solutions that were going to allow them to be able to do that. And I think what we're finding now is that as businesses emerge from the lockdowns and the crisis part of the pandemic into the the new normal, whatever that might be, actually they're trying to take a lot of the improvements and the benefits that were forced to take during the pandemic and actually take those forward into their businesses and into their client propositions going forward. So I just see more of a need from merchants and from businesses to get ever more professional and ever more slick about the way that they take payments. And that means that banks and payment service providers of all shapes and sizes have got to step up and rise to the challenge and make sure that we're there to help businesses to recover and to then help them thrive in the post-pandemic period.
Let's talk about the merchants. The bottom line for them is they just want to get paid. And they don't want to be spending time wondering how strong customer authentication is going to be an apocalypse type event for them. So is there any market share for a bank that can actually provide an easy to use solution for the merchant early, with all these regulatory changes affecting the merchant's e-commerce bottom line?
Yeah, like you said it, for the merchant, this has a huge impact. So it is a fundamental, of course, because they are there selling their goods, and one important part is that they get paid on those goods. And now this SCA basically applies a secondary layer on the security, which is kind of it's a good for merchant, because then there is a really authenticated user, which issue has said that, okay, it's the right user. So then, of course, the payment transaction is kind of a guaranteed. But same time, this has then, let's say, one layer also on the user experience that you may need to do as a consumer a little bit more. And in the worst case, of course, failure in payment means a lost transaction. It means, of course, that particular sales is lost. But in the worst case, if that's a clumsy experience, I might, as a user, see that, well, I don't want to buy actually on this e-commerce site or merchant anymore because it was not a good user experience. Maybe I do and select another one because there is a choice to be made, especially nowadays. If you look at on the other side, we all as a consumers, we are really, I would say, almost pampered with the great user experiences because there is a lot of course, big fintechs and the Apples and Googles who provide really great services. They have really thought the whole journey there. But same time, there are fintechs who have looked on certain niche services and provided really typically their point or angle where they come is the user experience. So therefore the bar is really high, and then merchant needs to also let's say acknowledge that one as well as of course the issues too.
It's Philippines economy is very much driven by micro entrepreneurship. It's a big thing. It's close to 22%, I think, last I checked, of all consumer income is actually micro entrepreneurs. And that's a segment that we're looking at as well. We see that segment is very much underserved. These people are fiercely like commercial. Whenever they see an opportunity to make a little bit of money or to save a little bit of money, they just put their flow that way. So one thing that we completely didn't expect is, we launched originally as a savings bank. And our payments capabilities, they were there, but they were quite rudimentary. And we're now kind of building them up over time. And we're now launching the loans to, basically take the savings and channel them into loans. But what we saw is our flow, our transit flow, just started going up and, up and up and up. And, by the end of the summer, it accounted for more than 3 times our deposit inflow. It was a transit flow. So we kind of started looking into that in the summer. And what we realized is because we came out with, originally with like all free channels to just like see what happens, we saw that there were multiple lanes where we could really make a very attractive offer to the micro entrepreneurs. So even though we've started, cutting out some of that flow by raising the fees, but even with raised fees, we still make a compelling proposition because it's a segment that is completely ignored by the traditional banking institutions. So we think there's a lot of opportunity there, and we'll be doing a lot more in that space going forward.
If I would be, for example, the e-commerce merchant, let's say in Australia or Singapore, and I would like to actually offer my services, of course, for the entire world. And if there is a European customer who wants to buy from me, well, they can do it. There is no enforcement that that merchant should be somehow regulated by PSD2 because it's for, of course, the Europe. But that also means that if my issuer, which is most likely European issuing bank, doesn't actually allow, there is no exemption rules applied and so forth, so they can reject the payment. So if I would like to make that purchase, but my bank thinks that, okay, well, it's a high risk, they can actually reject the payment, which means that then it's a lost business for those merchants. So especially in the e-commerce space, I think that this almost kind of a, let's say, pushes you as a merchant to look the ways to apply such strong customer authentication. And one of the things that we see being almost every country or nation being rolled out is, for example, this 3DS, where you have then already this secondary layer of security. Not everywhere, but I see that wherever we discuss, for example, because we also offer the 3DS offering together with our G&D partner company, etc. All customers are very much either already onto it or just thinking how to do it, and not that whether they do it.
Let's talk a little bit about you and specifically your tap technology. Do you think that institutions in, well, really all parts of the world should look to use the Convigo tap technology themselves?
Yes, Convigo Tap is our brand name for the solution where you can use your existing, already issued payment card for the strong customer authentication. And basically what it means is that the cards are there, so you don't need to do anything. That's great. What you need to have in the mobile, you need to have a capabilities basically to interact with this card. So there we provide an SDK, so small piece of software, which can be embedded, for example, to the banking app or banking wallet. And by doing this, you can basically use the payment card, read information out of that one. There is a technology behind which is secure, and I don't go to details on that one, but this enables that you can read that, okay, this is a payment card, and now I can use this as a second form factor because I believe that now it is Jukka because Jukka possessed that card. This works with any device which has a NFC enabled, so Android, and now lately we have implemented also support for iOS, which means that you basically have the whole mobile or all type of devices supported, and also the card side. So as said, so any card can be, so as long as it's a contactless card, which nowadays most of the cards are, whether they are MasterCard, Visa, Amex, or any other payment network labeled cards. So you don't need to invest. They are already there. And then additional feature there is that because you need to, of course, still authenticate somewhere in the back end. You can implement this by yourself, but also if you want to use this for so-called FIDO authentication, which is a standard for the authentication, this payment card now works as an authenticator, FIDO authenticator. So if you have a FIDO compliant, for example, backend, you have maybe some other FIDO authenticators, which could be again this kind of a dongles and so forth. So now your payment card also works as a FIDO authenticator. So there is a lot of, let's say, elements that you already have as an issue, no investment, and therefore it's, let's say, quick to market. maybe one more aspect on this one is also that when people have, this experience on tapping when they do payment, now it is the same behavior. You just tap and you do the authentication, which is, by the way, the big thing, because how we behave, there needs to be some learning curve, and now there is, because we are already used to this payment use case.
Well, that's all we've got time for on today's episode of the Paytech Show. I hope you've enjoyed hearing about the future of payments in a post-SCA world and what it would be like. Were we too hasty to assume it would cause an e-commerce meltdown, a payments innovation precaution? You be the judge. But I think our guests today have shown how it is possible for payments innovation to thrive in an increasingly secure manner. Thank you to all our viewers at home, and I will see you next time.